Okay, everybody, here we go. It's me, Gregory Mannarino, Tuesday, November 26th, 2024, my pre-market report. People, I want to start off with this here. This is Market Watch this morning, their economic report. Now, this should not surprise anyone who follows this blog. And just in case you had even the slightest misconception here, this is not going to stop. So let me just read this to you real quick. So inflation is heading in the wrong direction. Just how bad is it? You and I, since forever, have covered the fact there's a very incredibly ominous, if you want to call it that, of set of dynamics in play. We have a world today that is debt saturated. We all know that. We have hit that moment of maximum saturation, which I've explained for a decade would eventually happen, and we are here now. The situation for the world is dire with regard to rising prices, currency destruction on the back of artificially suppressed rates, which is not what we need, but that's what we're going to get. This is the central bank's plan to again eliminate the middle class, push wealth up to the 1% and 2%ers as the system is bridged. And it looks like the United States is going to be leading the way towards the tokenized system with the current merging of banks with cryptocurrency, which is the key component. And I can't underscore that enough. The key component to bridging us into the new system, the tokenized system, which we all know is coming. Anyway, look, with regard to inflation here, there's other headwinds that we have to consider, and I want you guys and girls to come away from this video with a very specific understanding of where we are going. And I'm telling you here again, moving into 2025, as I said yesterday, this is nearly inescapable. Could it change? Sure. But the way the dynamics are playing out right now, it appears that we are moving into a yet to be defined kind of a recession. I said a severe recession. We're already in recession here. But the illusion of the market seems to be tricking a lot of people, not you. But anyway, look, the fact of the matter is the issue of currency devaluation worldwide is in full effect. This has been a plan of central banks working with puppet leaders for a very, very long time to continue to suck the purchasing power away from the currency, foster the illusion of economic prosperity on the back of a stock market which just hit a new record high yesterday. But the mechanism here is not going to stop. We do not need lower rates anywhere in the world. I'm telling you right now, all these so-called developed economies with the same economic plan, trickle-down economics doesn't work. Devaluing the currency doesn't work. It works for some. It works for the 1% and 2%ers. For the rest of us here, this mechanism, it's the system is weaponized, 100% weaponized against us to foster this wealth transfer, which is only going to get much, much worse moving forward. Excuse me. Anyway, so with regard to this, look, man, central banks could stop inflation right here and right now. Puppet leaders could stop it as well if they had the guts to admit to the people that we don't need artificially suppressed rates. We don't need currency devaluation. But that's not going to happen. No way, no how, especially here in the United States, with the Fed's plan, again, fully engaged, along with the European Central Bank, several other central banks, artificially suppressing rates, now cutting rates here. Obviously, that means currency devaluation. And when you got puppet leaders promising the people, this is Trump's promise to you, that you're going to get lower rates, all this means is an economic wrecking ball is going to come sweeping faster and harder through the economy of the United States. And understand, we have become an import nation. We don't export things anymore. We used to be, again, the economic engine of the world. That we're now with the laughing stock of the world. But anyway, let us move forward with how this is going to play out. You can expect a few things to happen here. Number one, the mechanism of let's just stick with the Federal Reserve. It's all of these central banks now artificially suppressing rates. They can't just make it happen. They have to get into the markets, create the currency out of nothing. You know this already. Buy the debt. Now you're watching an interesting phenomenon here in the United States. Let's look at that real quick. I did make a printout. Where did I put it? Oh yeah, the 10-year yield seems to be dropping pretty precipitously, 4.28% here, and we're getting this rollover with regard to the relative strength of the dollar, which we said was going to happen just a week or two ago. It looks like it's in play, and the expansion of war, in my view, is playing a big role in this. And of course, that's fostering this, what appears to be a rollover in the MMRI. Just real quick, last night I put this out for all of you. This is in your inbox if you subscribe to my newsletter, free to everybody. Link in the description of this video. So I wrote Lions, important market, crypto, and commodity update. I wrote Lions, what we would like to see, hopefully sometime soon, is some profit taking in both the stock and crypto markets. Now, crypto does appear to be under some kind of a little bit of a correction here, which it clearly needs. I went on to say, in my opinion, this has gone way ahead of itself, Stock market too. With that, as long as, are you ready for it? Let's do it. As long as the MMRI is dropping, we buy every dip that comes along. Every single dip in the stock market, every single dip in the crypto market, and of course, people, look what I wrote here, man. Look what I wrote. You gotta load up on commodities. And if you a list of commodity ETFs, exchange traded funds, I did again put a link in this so you can. A couple of you have asked me about that. So look, I got your back. I'm trying my best to take care of you guys and girls. But anyway, this is a I can't stress to you how important this is. We need a drop. You need a pullback here. You need some profit taking in crypto. You need some profit taking in the market. We don't get pullbacks anymore, but we need to see this. As long as the 10-year yield drops, MMRI drops, we buy every single dip that comes along. Now, a couple of other things I want to bring to your attention that's kind of important here. Where did I put it here? All right. So let's talk about this morning I woke up to, hey, Greg, what do you think about Trump? Well, let me show you the headline here. Trump is threatening to impose sweeping tariffs on his first day in office. So I'm just responding to you guys and girls. I've spoken about this before, but I want you to realize in this environment how it's going to play out. Obviously, probably most retailers' stock, their company's stock, is going to get hit. It's a no-brainer here. Again, we import everything. We don't make things anymore. So from a stock market, from a retail, listen to what I'm saying here. I don't want my words to get twisted. From a retail standpoint, of course, you're going to see some retailers get hit. Of course, you're going to see rises in prices. Those are going to be passed on to you. You understand? You're going to pay for it. That's the way it's going to play out. Period. The freaking end. You're going to see the trade deficit balloon. What else would you expect? And tell Greg Mannarino one more time, who's the entity? Which entity is going to make up the gap? Who's going to fill the gap for the deficits? Of course, it's the Federal Reserve, which makes them even stronger. So tariffs help the Fed, plainly. But with regard to the overall stock market, you're going to think I'm nuts when I'm going to say this, but it's true. You're going to see the market go higher. The market will go higher. Why? Because the Fed is going to view this as a way for them to inflate further. I would not be surprised to see the 10-year yield fall. You understand? Overall, tariffs are going to prove to be, again, overall, for the market, for the stock market, it's going to be positive. For certain retailers, probably most retailers' stock, I would be getting out of retail if I were you. If you are an investor and you're putting cash to work in retail, you got to start getting out of here, man. You got to get out of retail. Put your cash to work in the financial sector. Again, understanding the deregulation, which is going to happen dramatically with regard to the banks, the merging of cryptocurrency, very positive for the banks who, and I realize, believe me, that the balance sheets on these banks are black holes, but it doesn't mean the stocks are not going higher as the world is, well, the United States at least is being bridged into the tokenized system. You understand? But I want you to take another thing away from this. So the tariffs here, again, retail negative, overall stock market positive, because why? You got the Fed who's looking to cut rates here. I think they're going to pause in December. Okay, let's see what happens. But again, we're going to get lower rates moving forward. That's what the Fed wants. That's what Trump wants. Trump promised you this. Obviously, massively positive for the stock markets. It's a no-brainer here, people. So again, I'm just going to tell you, if you're in retail, if you have exposure in your portfolio to retail, I would be looking to get out of it. I really, really would. Now, let me just say something else with regard to this. Stock up, okay, on non-perishables, things that you're going to need anyway, because I can promise you that tariffs, what have I said recently? I said, expect supply chain disruptions. Do you think that let's throw out a question here. Do you think tariffs are going to be a negative or a positive for supply chains? Duh, right? It's a no-brainer here. Obviously, it can affect and probably will affect supply chains. Nations already are geared up. Again, you know this. We covered it already. Trump has been promising to increase tariffs. We all know that. It's coming on day one, according to President-elect Trump here. Nations have already said, okay, let's do that. We're going to retaliate. We're going to hit you guys with tariffs as well. This has the potential to obviously cause prices to rise, which will happen. Don't listen to me. Listen to Elon Musk. Elon Musk himself. Don't take my word for this. Look it up for yourself. Trump's second in command, which is not Vance, it's Musk, said that he's the richest guy in the world. He's going to be loving this. But you are going to have to endure hardship. Again, you don't believe Greg Mannarino. Greg is lying. Greg is saying things to mislead you. Look it up for yourself, because I get that all the time. All right. But I always urge you, verify every word I say. See if I'm actually telling you the truth. So Musk did say you will endure hardship. Here's part of it here. So stock up. Expect supply chain disruptions, especially not just with regard to this, with tariffs. Expect it with regard to expanding war. So we got a lot of things that are hitting us. More inflation is coming. It can't be stopped. Okay, especially in this environment where you have central banks ballooning the global money supply, which is not what we need here. We need to contract the money supply. Again, we could stop inflation in its tracks. You haven't heard a word out of anyone's mouth, except me, possibly, of how we could end inflation like this. Central banks contract the money supply. Duh. Very simple. Economics 101, right? And of course, raise rates, which would give the currency more purchasing power. We can stop inflation. But it's not going to happen. You've been promised lower rates. The Fed wants to lower rates. Obviously, you can see the alliance here between the President-elect Trump and the Federal Reserve on the same page with wanting to artificially suppress rates further, massively currency purchasing power negative, inflation positive, and then on top of course, tariffs. That's where we're going. So I'm going to tell you again, start to load up on non-perishables, things that are going to come from overseas. A lot of your medications come from overseas, believe it or not. So start to stock up on this stuff because you're going to start to pay a lot higher prices. Again, don't take Greg Mannarino's word for it. Listen to Trump's second in command, Elon Musk. He already told you. If you don't believe he said that, look it up for yourself. Another thing I want to talk about real quick. So a lot of you guys and girls, again, look, man, I tried to my best to answer your questions. This guy, Trump's pick for the U.S. Treasury Secretary here. Two things are going to come out of this. First of all, this guy, obviously you all know this, and don't take my word for this, George Soros protege. It's no accident why he's being selected here. Not only is he a George Soros protege here, he's a multi-billionaire hedge fund manager. So what does that tell you? Couple of things here. This guy, obviously, this is no accident why he was chosen or going to be chosen here. Massively stock market positive, obviously. Also, okay, are you ready? Bond market positive, meaning you will see lower rates. What does Trump promise you? What does the Fed want to do? Lower rates artificially, okay, and kill the purchasing power of the currency. This is stock market positive. This guy is obviously being selected for a reason here. Boost the stock market, foster the wealth transfer to a greater degree, right up to the 1 and 2 percenters. And as I said, bond market positive. I think the bond market is going to have an orgasm over this guy, meaning you're going to see rates drop. You understand? There's a reason for all of this, people. Once you wake up, and I think some of you are still asleep, as to why things are happening the way they are. Why Trump was selected. Okay, the bridge to the system, artificially suppressed rates so we can work with the Fed here. The guy is a proponent, obviously, of negative rates. We know that from his last tenure. So if you can understand the dynamics in play, it's very simple to understand where you need to put your cash to work. With regard to commodities, people, embrace what happened yesterday. Got hit across the board. That means you load up on commodities here. Nothing has changed. In fact, it's got worse. The mechanism of currency devaluation via artificially suppressed rates is going to accelerate. And I'm telling you right now that this guy is going to help it along. Why do you think he was chosen? Because he's going to save you? No. He's going to make sure his multi-billionaire friends rip the face off of this market. And that gives us opportunity too. As I said in this yesterday, every dip that comes along, people, every dip that comes along in this market, my lions, my stock market lions, we're buying it all. Okay? Cryptocurrency dip, we're buying it all. Obviously, commodities, we're buying it all, especially gold, silver, more specifically, crude oil. I mean, people, this is literally a no-brainer. Again, I've told all of you, my job here has gotten so easy now that we obviously know who the next presidential selectee is. We knew already who it was going to be. And we know when we see people like this guy getting chosen for a Treasury Secretary, man, if you can't see the writing on the wall and realize that a lot of the stuff you were told during the campaign was a dupe and a lie, obviously, as it all is, a politician's mouth, when it moves, there's lies coming out of it. When they breathe, it's a lie too. Pretty obvious here. So we got this. You understand? So what do you want to take away from this? A couple of things. I sincerely believe that you guys and girls need to get ready for supply chain disruptions. A much wider war against you, because that's really what this is. This tariff war here, this trade war, again, it's not going to be one-sided, okay? It's going to be tit for tat. You should expect supply chain disruptions. Get away from retail. My lions out here, you're in the market. If you're in the market like me, get away. Get away from retail here. They're going to take a hit. It's a no-brainer. And I still say, let's see how this plays out. Okay, all the mechanisms are in place here for the market to continue to rise on the back of currency devaluation, the back of artificially suppressed rates. And all that is a wealth transfer. We are in the heart of the greatest wealth transfer that has ever been seen, witnessed, or even dreamt about in the history of the world. And I'm still going to tell you, despite trade wars and tariffs and currency devaluation, of course, and supply chain disruptions, you're going to see foreign investment in the United States market go crazy. Again, I want you to think about what I'm saying here. We have, with Trump, with this dude, and wait for the next Fed chair, okay, much more dovish. We have the most stock market friendly administration the world has ever seen. And believe me, the world is watching. World investors are watching. What does that mean? Much greater distortions in this market, people. I've been telling you this since time immemorial, but if you think that you've seen it all, if you think you've seen the end of wealth transfer being shoved up to the 1 and 2 percenters, Obviously that's not true here. The current administration, the coming in administration, is the best thing that could ever have happened to the 1 and 2 percenters in the history of the financial world. And that means you and me, people, I'm just going to say it straight out. We're going to ride their coattails. We know what's going on here. We got the playbook. How can we possibly lose? You understand? We can't. It's an impossibility. And then we got each other, as always. I always tell you that. All right, look, I really hope you got something out of this video. I want you to understand, obviously, look, man, don't take my word for this. And you knew this was going to happen. Inflation is going not just higher, but much higher. Prices are going to start rise all over the place, not just on the back of currency devaluation, but a trade war. Again, tit for tat. It's not one-sided. Expect these things to happen. You knew this was going to, you had to know that this was going to happen. And don't take Greg Mannarino's word for this. You, not the 1 and 2 percenters, are going to endure hardship. That was the exact words used by the illustrious second in command here, Elon Musk. He's probably number 1 in command, but that's besides the point. All right, love you all from the heart with all I got. I want to hear from you. Greg, you know what? You're wrong on everything. Tell me why. I am willing to accept the fact that I may be wrong. And for all of you that think I got it right, which I think is probably 99% of you, we got this. We got this. I know you get that, all right? Love you all from the heart with all I got. I'll see you later, 4 or 5 p.m. Eastern for the live stream, okay? And, well, that's all, folks. Take care of yourselves and each other. Until I see you later.